Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, June the 28th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement in your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. It is a week where I'm on a family vacation, but I am still trading. That's the beauty in this type of occupation, is that you can trade from anywhere. So I'm trading on location from somewhere abouts in Michigan. So anyway, let's get this on with what I've gotten done so far and some of the past economic data that I missed yesterday because couldn't get everything working out appropriately. We were having some issues with some of the cable. But anyway, we had durable goods coming out. Durable goods, remember, is core durable goods, I should say, it's a 3-month or 3-year type of instrument that you would buy, or machine that you would buy, whether it's a computer or a car or things of that nature, something that would last, an electronic, let's say, even that would last over 3 years. So that's core durable goods. That came in at negative 0.3, was expected to be a positive 0.5, so a pretty big miss. Then you add in some of those other items like automobiles, transportation for durable goods came in at negative 0.6, expected to be a negative 0.9. So that one's slightly better than expected, but the core durable goods, the things that the consumers are really buying more often, not doing so well. And then we also got crude oil inventories yesterday, came in at a drawdown of 9.9 million barrels, expected to be a drawdown of 2.4 million barrels, so a huge drawdown over than expected. As you can see, that's pushing crude oil up into the 74 handle right now. And then today we got GDP coming in at 2%, expected to be 2.2%, so lower than expected there. That's going to kind of be a little cog or something to grind the gears of the FOMC, because they want to see GDP expanding to keep that mandate of increasing interest rates. We start seeing GDP pull back, they are going to be in a tight spot of trying to raise interest rates. They're going to have to see something else in order to raise those interest rates, or have an excuse to raise interest rates, let's say. All right, so anyway, we got crude oil moving higher slightly today. Everybody's happy today, except if you're a gold bug, I would say. But crude oil moving higher, traded up into the 74 handle, just slightly off of that now. Gold continuing to slide right down to that 1250 area I was expecting us to find support for. We might break through that just a little bit, just to put the panic button on a few people, but I think that we're going to probably find some support here right around 1250, and maybe even a slight bounce from here. Bitcoin not feeling any love, still trading in the 6,000 handle. I talked about it yesterday. I talked about it wanting to go down and test that 5880 mark. I just feel like it needs to go down there and test that, and I wanted to see a sharp drop, kind of like we saw back here on this sharp drop, and then a snapback where people gobbling it up. Right now it's just kind of flatlining, which is not really a great bottoming type of situation. It's still back and forth. We're not seeing that gobble up of supply, if you will, of people dumping. So I'd like to really see that kind of break down and then have the flood of liquidity come up and gobble it up. That would drive me to believe that Bitcoin is ready to resume an upward trajectory. We're not getting that right now. It's just kind of floundering around. That's the word I was looking for. All right, on to Dow Jones Industrial Average. It is in negative territory. It's the first time I've seen it in negative territory for a while. We were in positive across the board, but just slightly in negative territory, albeit higher than where we opened. That's why we're getting a green bar, but it is in negative territory from the close of yesterday. Then we've got the NASDAQ Industrial Average, or NASDAQ NASDAQ in higher territory today by about 16 points. They've stayed in. They came and tested that 50-day moving average. We can see right here, tested the 50-day moving average, and we bounced up and away. We're trying to hold this 38 Fibonacci extension, which I've talked about acting as support. It's been pretty good the past few days. You know, break down below that to test that 50-day moving average isn't a bad thing. You know, I would really like to see it settle up in the 7,000 handle and above this 7,004 for the most part, or 7,005 on this one, but right above that area would give us a little bit of breathing room and a move to the upside, hopefully. And then we got the E-mini S&Ps. I just have this on the 30-minute chart. These are 30-minute candles. You can see off the open we started rallying, just taking a little bit of profits right now is what it looks like to me, but pretty decent economic data across the board, albeit that durable goods number not so good, but that crude oil inventory, or the crude oil numbers, have been really a surprise on the draws. So that is really leading to me believe that there's some undertones of economic expansion, as that's usually the first place we start seeing some of that happen. All right, on to a few things that I've done with Deere. I talked about this, doing those 125 puts in July. So in my margin account, I sold the 125 puts in there for 75 cents. In my IRA, I added in the 105 puts to define that risk. So I'm short the 125, 105 put spread. I've built it so that it is like that synthetic naked short put that I do for my IRA to meet the rules, and I did that spread for 75 cents. So basically buying that 105 put for a nickel just to define that risk and meet the rules of the regulators that try and ruin my IRA trading. And American Airlines is another one that I took off for a loss. Remember, I played this to the upside. I was long the July 38 calls in there, and it's just not working out. I ended up getting out of those for 169 on a loss. So that obviously didn't work out when you have long puts. I didn't get the directionality right. It did help me with this volatility really starting to expand in American Airlines. It allowed me to stay in this a little bit longer than I normally would because it wasn't really losing a ton of value due to that expansion and volatility. I was getting the directionality wrong, so I was losing deltas there, but the expansion and volatility was helping make up for some of that loss in deltas. Not enough to keep me into positive territory, but it did help out. So that is why it's super important to follow these rules that I put in place to set up like a long put in something like American Airlines. Yes, or sorry, a long call. Yes, I did get the directionality wrong. That's fine, but I kind of stemmed the losses by getting involved in this in a really low implied volatility environment. So when that volatility expanded, it actually did help me out. Yes, it was a loser, but those are the little nuances that I teach in order to help you guys increase your success rate. We didn't lose as much money on this as we normally would have with just a directional assumption being wrong, but because we played it in an environment where we could get expansion in volatility because it was so low that it would help us out heading into that earning event. So not the best trade in the world, but because we set that up properly at inception, we did better than what we may have done otherwise. All right, MGM is another trade that I closed out. Remember, I've been squeezing this for a couple extra days just because the overall markets were pretty bearish, and this one just no signs of relenting. But now we're starting to get a little thin. You can see this volume really starting to thin out down here towards the bottom. That is kind of starting to signal that the selling pressure is starting to ebb a little bit. That might give us a little bit of bounce. So therefore I decided to cover these, and I was long the August 30 puts in there. Usually my rule is when it comes down and touches that strike, that's where I'm looking to get out, but this was so bearish that it just continued to go, and decided to stay in it for a little bit longer to keep some of those negative deltas in my portfolio. If you guys remember, I've been very negative delta. As a matter of fact, at one point I was up to over 1,000 negative deltas. Now I've pared that back. I'm trying to slow down on some of my paring back of short deltas right now because I want that exposure. But that being being said, I can't pass up the opportunity to take these profits on this. I'm well over and above what I would expect for a trade like this. So like I said, MGM went into the August, bought the 30 puts for $1.02 in both my IRA and my margin account. Different quantities, of course, but bought those for 102. Like I said, sold them out today for $2.61. Might even be able to get out better. Was a little bit higher when I got out of that trade there. So out of MGM, added Deere, and got out of American Airlines for a loss. So that's everything I've done in the past 2 days, basically. And today's webinar is going to be a great one. It's going to be on the strangle. So when we have high implied volatility and want to take advantage of a non-directional assumption, this is the one. When you don't really know which way it's going to go, or you kind of feel like it's going to kind of settle down in a range like MGM has here in this area or this area, that would be the perfect scenario for a strangle. And I'm going to talk about how to set that up in today's webinar. So go to protraderstrategies.com, sign up for that. That's all I got for you guys. Other than if you can't take that, take it easy.